name is Haider Ali. Today, me and my group member are going to present Statistical and Valuation report about the Shell. In this report, we will talk about the Shell background and key information and its product and services and marketing positioning, its capital structure, its source of finance, and trend analysis. And moreover, at the end, I will talk about the valuation method used by us to value the company, and at the last, I will talk about the conclusion and recommendation about the different source of finance which used by the company to raise the capital. Okay. Let's start with the background of the company. Shell was established in 1907 by merging two companies, Royal Dutch Petroleum Company of Netherlands and Transport and Trading Company of UK. So, if we talk about the business model of the Shell is known for exploration, production, and refining and marketing of oil, and natural gas manufacturing and marketing of chemicals. Another interesting fact about the Shell is that it was the 48th most valuable company around the world in terms of market capitalization. It has a market cap of 1.97 billion. Okay. Another interesting fact.
191.
Okay. Another interesting fact is that in 20 December 2020, Shell make a very interesting move. It's changed its name from Royal Dutch to Shell PLC and move its headquarters from Netherlands to the UK. Moreover, Shell is planning to leave London Stock Exchange and try to list to the Nasdaq. Moving toward the capital structure of the company, it seems that the Shell is relying more on equity financing as compared to debt. If we look at trend in the capital structure from 2018 to 2020, it's moved towards the debt financing as compared to the equity. From 2021 to 2020, it moved back again to the equity. So if we go in depth of source of finance, in debt financing, Shell use two different sources to borrow a debt. It's borrow from the bond market and as well as through the bank, another borrowing. Moreover, Shell have another additional credit facilities under the two programs, under the commercial paper program and another the US Shelf program, which is supported by the committed credit facility available to the Shell. Okay, if we talk about the equity financing, Shell have a 584 million number of outstanding number of shares. Moreover, from looking towards the capital equity financing, Shell do not issue any kind of right issue or preference share in its equity finance. Another interesting fact about it is that Shell is repurchasing its share, which will impact positively about in its share price in future. So, if we move towards the next slide, my friend Bakar will talk on the vertical and trend analysis.
Well, horizontal analysis are used to evaluate the performance of the company, and if we take the 2018 as the base year, as compared to 2018, there is a slight decrease in the revenue of the company in 2019, and there was also an increase in the operating expense of the company, in which interest expenses are 25%, which is due to the company's movement towards the debt financing, and the profit was about 31% down as compared to 2018. In 2020, company also suffered a huge loss of 190% due to pandemic, and after 2020, at the start of 2021, the Shell started to recover, and it also increased about the revenue about from loss to profit. It's about 20% of its revenue, and the Shell also controlled its operating expense as well and decreased its profit from loss to profit and convert its loss to profit. In 2020, the company due to increase in the oil prices as well and controlling on its cost of sales and other expenses, operating expenses, Shell has 79% of profit after tax, which is a huge profit after the pandemic and the poor performance in past years. So if we talk about the vertical analysis of the Shell company, and after taking the revenue as the base, so Shell has a good control on its cost of sales because it's decreased from 81% to 74%, which is a good control. And also they also have a good control on their operating expenses as well. Shell suffered a loss of 12% in 2020. This is just because of pandemic COVID-19, and after that they started recovering and have a profit of about gross profit of 27% and the net profit of 8%. In 2022, again, Shell started recovering and a rapid increase in its sales, and they have a good control on their cost of sales as well, and on the other operating expenses. The Shell have had about 11% of the profit increase. Now Haider will going to discuss the valuation method of the Shell.
So what are the valuation methods? Basically, the valuation methods tell us what the potential cost the acquirer will pay to the company to acquire the company. We use 3 different approaches to find the enterprise value. First one is accounting approach, then the efficient margin approach, and the last one is discounted cash flow approach. So first talk about the accounting approach. In accounting approach, we will rewrite the balance sheet. All the financing items we will move to the right hand side of the balance sheet, and all the financing items we will move to the left hand side of the balance sheet. And another method, if you talk about another method in the market value approach, we just only revalue the equity section of the balance sheet according to the current share price. So we move the loss method, the discounted cash flow method. Under this method, we just take the discounted cash flow from the cash flow statement, and then we find the projected cash flows of the future year in order to find the equity value of the company, and then we compare this equity value with the current share price of the company to see that what is the value of is the share price is the share undervalued our value. According to my calculation, my share price is £9.79, but in the Shell, the share is trading in the market at 22 pounds, which indicate that Shell. My friend Zahid will explain you about the Porter 5 forces. Zahid, please, can you explain this?
Sure. Here I talk about Porter's 5 forces. We have 5 factors. In first factor, is the threat of nutrients. Shall tackle the threat of nutrients through innovations, new products, economies of new scale, and research and development. The second one is bargaining power of suppliers. In this, long-term contracts on fixed price, multiple suppliers in different geographical locations experimenting with products and ready for shift to another. And third one is bargaining power of buyers. In this, product differentiation with quality building brands and large customer base research and development. And fourth is threat of substitute products. In this, different products with unique benefits and research on customer needs. And the last one is competitive rivalry. Focus on new customers rather than winning others, and make cost leadership and collaborating with competitors and gain access to new markets. Next slide, please. Now I call to my next member. Can you please come and explain?
Stock trend benchmark. Looking at the graph, we depict that the share price of Shell company is fluctuating. In 2018, there is a slight increase in the share price due to de-investment of New Zealand assets to simplify its portfolio. Moving further, in 2019, the Shell company acquired Greenlocks, US charging provider, to extend its charging facilities. Then in 2020, the pandemic came and the production of the oil and gas is reduced, which is like they did not produce 2.53 of the target. It also reduces its operational cost and capital spending due to COVID-19. Moving further, in 2021 May, the Dutch court ruled that Shell must reduce CO2 emission by 45% by 2030, which also led to decrease in the share price of the firm. Then in 2023, in March, FTSE 100 almost wipes out losses as surging oil price boost Shell after the end of COVID-19.
So, after evaluating its capital structure, its stock price, we reached about a different calculation about liquidity and other issues. So, we've seen that the Shell is relying heavily on the equity financing as compared to debt. So, if you look towards the debt, Shell have a 4,594 million payment due in the coming year. So, if we compare this with the cash generated by the company, which is 45,966 million. So it means that company have enough cash balance to pay its long-term liability. So if moreover, if we look towards the working capital of the Shell, it indicates that the Shell have enough working capital to meet its day-to-day operation needs. Shell also have the AA credit rating, which is indication of its strong financial health. So what we recommend on the basis of our conclusion, as a financial advisor, we evaluate the finances of the company, and the company shall have WACC of 5.9%, of which cost of debt is 4.5%, and cost of equity is 2.7 to 1%. So this shows that company is paying better return to its equity provider as compared to the debt provider. So we recommend that Shell should issue a right share of 1 million. Shell should raise the capital through a right issue at discounted price as compared to the market price. Why? Because it will attract our investor if we issue a share on the discounted price. Another reason for raising a fund through right issue is that company is repurchasing its shares. That gives a signal about the positive impact of share value, as it will attract our investor, that they may think that the company's share price will rise in future. That's why company is buying its share. Moreover, right issue does not impact the liquidity of company, which helps to the investor to feel safe and keep investing in the company.